Gautam, let's get you in then. I think all of us dream of having a better house, maybe a better looking one, a larger one as well. I've personally pushed back my plans for a few years, going by the kind of pricing that we're seeing. But that's a sector that y'all are clearly quite bullish on, right? Real estate. It's come back after a while. It's enjoyed the last 2-3 years or so. But y'all believe there's a further runway from here? What's the geography y'all are most bullish on? And if you could help us out with some key points.
Yeah. So look, it's a broad view on the property sector, not just geographically.
Okay.
The argument being, like it's a cliched term, is this time different? But that's the argument our analyst is using, that this time is different, even though there is discussion that property prices have gone up. And the analysis is based on the usual matrix of affordability, inventory to sales ratio, demand supply, the structural demand trends, etc. On all the metrics, Indian property cycle is far away from reaching its peak.
Okay.
This is at the fundamental level. Now let's look at the stocks. Without mentioning individual stocks, even at the sector level, we are nowhere near peak in terms of where the valuations historically have gone to, or even globally where we see properties are a very deeply cyclical sector, and there are accounting variances. But even then, what's the delta from bottom to an upcycle in terms of multiples? Indian property sector has a lot of legs left to go. So again, it's not just a 6-month call. It is one of the structural calls our analyst is making, and we all as a house are backing that property sector in India still has some years left.
Number of 100 crore houses which are being sold. I saw a report on the newspaper over the weekend. Yeah. I mean, just amazing. So I think that's a faster selling category, maybe, right?
So that could possibly reflect the wealth creation we are seeing in the country. And again, look, that's not the market of the sector. Yeah. That's a small part of the market. The sector,
but it's still premium because affordable is not doing well. I mean, there's no supply affordable, right?
Absolutely. So again, when we say premium versus, say, I won't say affordable, but somewhere in between, that segment still has long legs to go. And we are seeing momentum there also.
So if you typically look at a cycle, which year are we in for the real estate?
So I think we at least 3 more years, unless we see an economic shock or something. We are at least 3 years away. Look, the biggest data point is the inventory to sales or the supply coming in. It's nowhere near any cyclical peaks. Nowhere.
Anything else from the listed, sort of large listed space, lots of plays which you think?
So utilities in the renewable space, we remain positive.
Yeah.
Then we are more cautious around autos and consumer discretionary. This is on the cautious side, which also we've been sticking to and still maintaining that view. We still haven't seen any signs of changing our view on that space.
Well, indeed.
Quick commerce, etc.
Quick commerce, Quick commerce, you'll have a view out there. And the newly listed one, I think, is something that you'll like quite a bit out there. So if you could tell us between the one that was listed earlier, that corrected and then bounced back, and the newly listed stock as well.
I won't differentiate between the two, but we like both.
We like both of them, okay.
So our analyst is bullish on that space. Again, the simple argument is the opportunity set is just too big. And we are far away from reaching anywhere near peak penetration. So it's such a long runway for growth. And still, the incumbents have an early start. You'll see more competition happening. But we have seen the playbook in multiple other subsegments also.
What does it mean for listed physical retailers?
So look, they are also trying to evolve and replicate.
There's one which is listing now, which is going to come list on Wednesday. There's, of course, the large, which is already listed stocks, underperformed quite a bit. I mean, they'll have to evolve, you think?
They will evolve. They will have to evolve. Ultimately, everyone has to evolve in response to consumer asks. But the question is who can do it at scale as a third party and who can do it for their own business. And it'll be mix and match. So as a distribution channel or as a way to sell to customers, it will evolve. Absolutely.
Since we briefly spoke about China, normally when you talk about China, you talk about metals, talk about chemicals as well. So what's your view on both those two spaces? Because it clearly has an impact on the global space as well, both in metals as well as in chemicals. Any view?
So look, at a larger picture level, metals, we don't have coverage right now, so I won't be able to give a view. Chemicals, right now, it's stock specific. So it's an opportunity also as well as a threat. Like if there's a lot of supply coming in China, it's a threat from a dumping / oversupply, but also an opportunity for Indian companies in terms of the China plus one theme. So it's not a universal theme across the sector. Each company's own strategy. So that's the way our analyst has approached it. It's whichever company is better placed in the China Plus One theme, we are bullish.
All right. And, before we lead into our next conversation that we're going to have, what about the NBFCs as well as, the banking space? There are reports that suggest that maybe credit growth is slowing down a little bit, and there could be some near-term pain as well in some of these NBFCs. How do you all approach that space? I think in banks, you're like the top banks, right? The largest private sector bank.
So we have been cautious on that space. Our analyst has been highlighting stress building up, including some early data points showing stress even in the CV sector, for example, beyond MFI and beyond unsecured.
Yes.
So, and we still don't see any signs yet from on the ground of it bottoming out. So you see early leading indicators of bottoming out. We haven't seen that. So we remain cautious broadly on that space. We are still cutting earnings in that space, except the large private banks or the SOE banks. We're still cutting earnings. So,
But one is growth slow down because of the lending opportunities, etc. But the other is the RBI and what is done, right, in terms of cracking the whip. And 2024, we've seen so much action.
Yeah.
It's an unfair question, I know, and it's not like one size fit all. But do you think that also perhaps is the reason? Because so many players are in a way out of the segment, or products are out of the marketplace in that sense, and maybe that's also hurting at the margin. Do you think that'll change a little bit? Maybe a little bit of easing on the regulatory front?
That is what our base case is. So if I look at why my GDP growth slowed down so sharply to 5.4%, we need to take into account that there was a very sharp slowdown in headline credit growth, even though bulk of it was consumer credit. But even your headline credit has slowed from a peak of 18% to as low as 11%. And all that happened in a matter of 6 months. So going forward, we are actually expecting the credit growth to stabilize at around 12%. I would expect, I'm not building in more regulatory tightening in my base case when I'm looking at the growth forecast. We are assuming status quo on the regulatory front. So credit growth largely stabilizes at around 12%. That is what is feeding into my numbers. Obviously, we would prefer to have a better mix of credit rather than only focusing on consumer sector. Obviously, we would want a more broad-based recovery in credit, hopefully towards the industrial sector or the capex-oriented sector. But I think a lot of global uncertainty is in the price right now to actually expect that the credit growth could actually flow into industrials or the larger corporate in a meaningful way beyond the working capital.
But the demand has to come from them, and which perhaps is not yet happening in a big way. Thank you both for coming around to our studios, Tanvi and Gautam. It's a pleasure.